is everyone's week been going so far? Rolls Royce is making you lose less. Yeah, just can't take CFDs at the minute. 100%. 100%. Stay away from CFDs at the moment. Let the market turn, and there will be loads of opportunities. Loads of them. We don't necessarily have to jump in on CFDs straight away. So we're going to have a look at the two trades we took on the trading day, and we're going to look at the indices for everyone. We're going to go into a little bit of detail of what's going on with them. Okay, so we'll start off. Looks like everyone is in a Nasdaq's killing me. Felix, I'm assuming you didn't get triggered into the Nas trade. So let's have a look. Nasdaq. I did. Okay, so the Nasdaq was there. I know some of you guys took that trade there. Entry above that, stop loss below it. So this is a trade we took previously. So entry there, stop loss on this one. Can I remove that? No, it doesn't look like I can. Okay, so there's a trade some of you guys took. Entry there, would have got stopped out. The stop loss would have been behind this low here. So anyone that took that would have got stopped out at the moment. So we have an inside bar here. We have this inside bar here. So the thing is now is we sit and wait. Look, I took that trade there. I didn't take this one because I had my 1% loss, and it's now just wait. There's going to be loads of opportunities in the market with the likes of the stock. So we don't necessarily have to jump in on this every single time. If I get this and move this down, so go ahead, Henry, look, there's a double bottom there. This looks like a really good place to buy. It does, but the problem is the market's dropping. Is that we've had a low, we've tried it, it's made a lower low, we've tried it, and now it's made a lower low again. So let the market sort itself out. How you getting on, Bubbles? Let it sort itself out before we know what's going on next. Because the market could come back down to there. It could come back down to there. There's no guarantee it's going to stop here. So don't be trying to preempt the market at the moment. I know there was also a trade on the likes of the S&P and the Dow. So let's have a look at the S&P 500. I know there was a trade here as well. Some of you guys may or may not have taken that. Looking, entry was above there. Above that green bar, and then the stop loss would have been below that green bar there. So I know some of you guys took that as well. Anyone that took that, you haven't been triggered into that trade. Again, we're at this floor, so we have a bounce here. So if I get the animations here and look at the likes of this, we have a bounce there. Bounce there, bounce there. Oh, wrong level. My bad. So we have a bounce here, a bounce there, and now look, it is bounced again. Now, the thing with the likes of this is it seems to be holding at this level, and the chance of us getting triggered in is quite slim. Whereas unlike the Nasdaq, what's happening is we're getting triggered in and then it triggers down. And that's the difference between the two of them. Now, does anyone know what the biggest driver in this, what industry is the biggest driver in this drop down at the moment? Anyone know what industry is the biggest driver of this move to the downside? Absolutely, tech. Tech is the biggest driver of this at the present moment. So instead of trying to catch a falling sword or a falling knife, because the problem is, has anyone ever dropped a knife and tried to catch it? Doesn't end well unless you get extremely lucky. It doesn't bode well for anyone. So the idea at the moment is let the market sort itself out, and then when it sorts itself out, we'll have enough stocks. They'll all be starting to move to the upside. They will have a cycle of first pullback, and then that will be our entry in. So there's going to be loads of opportunities. We just have to sit on our hands at the minute. Don't get sucked into it. Now, the likes of this here is the S&P 500. So we know that, well, some of you may know, some of you may not, is that the Nasdaq, 60% of the Nasdaq is weighted towards tech, weighted towards the FANGs. So it means then the FANGs have been dropping. The Nasdaq is more than likely going to drop. Now, we've had a big, huge selling day yesterday. Can anyone tell me what was the big reason that we had such a sell-off yesterday? Can anyone tell me? The Fed saying they're running out of money, but we've known that for a little while. We've known that the Fed are running out of money. They've put in what, at the 18th of October is a time where they're going to run out of money. But again, the Fed just go to their printer and then just print some more. So it's not. We knew that already. That's not something that's new to us. Facebook, the Facebook service. Look, Facebook had sort of two little hits yesterday. So it had sort of two hits yesterday. It had one with the whistleblowing. Right, that was the first strike that it had, and that one wasn't huge, but it had a little bit of negativity on it, and then it was the outage. Then when the outage happened, all of a sudden, then look, it just went into free fall. Just continued to drop like a stone. Okay, so sometimes news like this drives the market massively, and that was the big driver. And then obviously the other ones haven't done extremely well on the same day. So, and that was the big drop on, say, the likes of the tech and the Nasdaq. So if we're looking to trade the market, if you're looking to find the floor, if you're looking to wait for the market to turn, at the moment, the S&P is a much better trade. Now, why are we sort of looking at the S&P instead of the Nasdaq? So what is the difference between the Nasdaq and the S&P? Well, the big difference is another 400 companies. Another 400 companies. Okay, where the Nasdaq has 100 and they're mainly tech dominated, where the S&P has another 400 companies in there and it's not tech dominated. So which means then you have banking, you have oil, you have the durable goods, you have consumer goods, you have everything in there, mining, you have everything in there that is helping to turn the market. Now, can anyone tell me sectors that were actually doing extremely well yesterday? Well, there was only one sector that done well. There was two at the beginning of the day, but at the end of the day, there was only one. Nope, pharma didn't do well. Banking, no, banking didn't actually, it started off well and then it dropped. So well done, Ashley. Energy was the only market that done well yesterday. And there's no coincidence with what's going on. All right, there's no coincidence with what's going on. So if you are someone who is wanting to trade at the minute, wouldn't it make more sense to be trading the energy sector at the moment? If you're someone who is dying and has that itch to scratch and has to trade, isn't energy, isn't that the crypto as well? But isn't that the sector that took off yesterday, was flying yesterday? So just be aware and make sure you understand that if you're looking to trade, there's always an area that's doing well. There's always an area that's doing well. All you have to do is just look for it. That's all we have to do. Is to just look for it and make sure that we're looking in, say, the right places instead of jumping in the markets just for the sake of them. Okay. Let's have a quick look at the Dow. And the Dow as well has come down into a double bottom into sort of this area there, into sort of this area. Now, again, there's more room for this to the downside, but it's not looking as unhealthy as the likes of the Nasdaq. Okay, so just be aware. Now, we placed 2 trades on the trading day. Now, we took eBay and we took Nike. So we're going to have a quick look at eBay. Now, the reason for taking eBay on the trading day was, 1, we have an overall trend. 2, we have cycles. 3, we had a touch, 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 and a touch. I probably even could have brought that down to there, even maybe not. Okay. We could probably edit it up now. So is this trade still valid? Is this trade still valid here? Now, just to put this into perspective, this was not a CFD. This was an underlying asset. And see the arrow? There's my trade line. Now we put a pending order. Okay, so a pending order is something that you are taking a trade before that. If the market hits that level, you're in. And look, the market didn't hit that level. So is this trade still valid? Well, there's a couple of negatives for it, and there's a couple of positives. So can we list the negatives here? Is there anything? Why is this not a trade? Right, 1, it has broken a trend line. Anything else? Any other reason this is not a trade? Anything else? Right, the sector is moving lower. Absolutely. Someone said it's a downtrend. Well, if you're looking at sort of there, it's a downtrend. But if you're looking at the overall market momentum, it's an uptrend. Okay, so lower highs and lower lows. Absolutely. So there are a few negatives about this trade. And those negatives are the reason it wasn't taken as a CFD. They were the reason it was taken as an underlying asset. And it's also the reason why entry was here. So we wanted the market to turn before we got triggered in. So that means then anyone that took this trade, there is no cost to this trade whatsoever. It's still falling. So it means that there's no cost to this trade whatsoever. It has cost us no money at all. So it's broken our trend line. Has it broken our trend line? Or is that trend line still valid? Touches there, touches there. Now, I'm going to class that as a touch because it's near as damn. And now it's touching there. So is that trade still valid? Now, I haven't looked at any horizontal levels yet to see if there's anything there, but just looking at that, now it is. And that's the problem with trading. It's so subjective that 1 minute the trade is there and the next minute it's not. Okay, and that's one of the biggest problems with trading is that we are a little bit subjective with our analysis. Okay, so if I zoom out and have a quick look, I'm going to get a horizontal level and I'm just going to pop it there. So we have a touch here, and let's see if that will come down there. Let's see, we'll zoom out and have a quick look, see what information is over there. Okay, there's no more information here on this particular chart. What am I looking for? I'm looking for eBay. Control F. Okay, so there was the entry there of that. Now I'm going to bring this down. I'm going to pop that in there, and I'm going to delete this one. Remove. We're going to edit this line up there. Okay, so the idea is now, if I'm zooming out, and unfortunately, we don't have any more data over there. Okay, we're at record highs. We don't have any more data. Perfect. So the question then is that still valid? Or are we expecting it to come back down to this horizontal level? Is this horizontal level strong enough to hold it? Or is this trend line stronger? Which one do we think is stronger, the horizontal or the trend line? So the general consensus at the minute is the trend line. Now, I understand that the market is at the minute in a downward trend. Understand that completely. Still understand that the market is still in a downward trend. Understand that completely. So, am I going to get into this market live? No, I am not. I'm not going to get into this market live. What we're going to do is we're going to put in a pending order here again, above yesterday's bar. Now, I'm going to edit this up. It's a horizontal. I'm going to make this line a little bit smaller. Okay, so our entry is now going to be slightly above that. And this is where amending trades comes in, is that we are now amending this trade. So there was our entry, which was at 70.79. I'm now going to update this trade to this point. So this level is 69.77. So that is now where my new entry goes. So what I'm looking for is if the market continues to drop, I'm not in this trade. The market continues to drop, I'm not in this trade. And that's how I trade a lot of the time, especially when the market is dropping. If we have a bullish day, I get triggered in, and then it drops. Unfortunately, I just now sit through it, and it is what it is. But this is a trade that I'm looking at. This is something that meets the rules. And if it comes back down to this level, I will just delete my trend line here, and we'll be looking at this level again. So looking to entry above. Can everyone understand the reasoning behind that now? Because if we look at this, the overall trend is going up. We've had a nice pullback. It's come back into a little area. Again, I'm buying this as the underlying asset and not the actual CFD. eBay has had a pretty decent year. Looks like it'll have a pretty decent quarter. eBay have started doing their own payment system, which means then they're handling their own money as well, which would assume that then that will bring more profitability to the likes of eBay. Okay, and that's the reasoning behind that. And the other one we took was Nike. So the other one we took was Nike. If I get my horizontal level here, pop that in, say there, I'm going to edit that again. So right click on this, properties, and I'm going to make this a little bit fatter. So we have sort of this ceiling. Now, what I've done here is we have a little zone. Okay, so the difference between a ceiling and a zone is that we have a touch here, which my level could be up there. We have a double top there, and then we have another double top right there. So it's between this area. So there's a couple of quid here between these two levels. So I'm popping that there. And we've had this pretty big drop on the likes of Nike. Okay. Now I know someone said to me, Henry, look, we actually have a trend line here, but yeah, that's more wishful thinking than having a trend line. For me, that's not valid. For me, that's not valid at all. But again, it's there. 1, 2, 3 touches. Again, it's there. We'll zoom in and have a look at this. But even though the market is dropping, we've had 1, 2, 3, 4, 5 days of consolidation. The market hasn't gone anywhere. It looks like the point is that this is the area where Nike is holding. Seems to be a little bit of consolidation here, which has given us promise. Now, also, we've had a gap here. See this gap? We had a gap here to the downside. Now, the problem with this here is that it actually had good earnings. It actually had good earnings, and the market still gapped down. So it's now sitting on this level. So the trend is up. It's had good earnings. We've come back to this nice level. And this is something that I'm happy to hold long term. Absolutely happy to hold long term. It's not. eBay will probably be a much shorter term trade in the likes of Nike, but I'll be happy to hold on to Nike for the next 2, 3, 10 years. Absolutely. So for me, this is the better of the two, but they're the two trades that we took on the trading day. The other one has to be amended. And then this one here is still valid. Okay, we don't have to change our entry. And look, the good thing here is that our entry is above this consolidation. So we only get triggered in if the market pops to the upside. But if the market continues dropping, then we are not in this trade. So from you guys looking at this and watching the webinar, which of these two trades do you think will be better, eBay or Nike? Someone said Nike's pre-market is at 148. Let's have a quick look. So the pre-market looks like we will be triggered in. So 18.10. That means that if the pre-market ends up there, so across the market, everyone has clicked Nike. No one has picked eBay. Okay, cool. Well, that's the consensus on it. So Nike, in my opinion, is a better trade. It looks like we will be triggered in. This is an underlying asset. Yes, this is an underlying asset. So that is something. That's something that I have placed. There's something that I'm trading on MAGA. So it is something that we have taken there. So some of you guys said to me about crypto. Okay, some of you talk about crypto. You talked about the likes of crypto running. So we'll have to have a look at this. There's no getting around that. We have to have a little look at the likes of Bitcoin, Cardano, ADA, so on and so forth. Now we have had a nice little 1, 2, 3 days. I'm going to call that 3 days here. So we've had 3 nice days on crypto. It's gone from 40,000 almost up to 50,000 in the space of 3 days, which is lovely. We can see there that I'm up 25% at the present moment on my positions. Again, that's to me is irrelevant because we're looking at this long term. I was looking at a price prediction there. So for the end of the year, one of the guys was talking about Musk is at it again, this time Shiba. Was looking at it. He's a price prediction of BTC by the end of the year will be between 5,000 and 500 million. That was a very bold prediction of him, wasn't it? To be between the two of those. That was nice. So we have had this nice little run on this. And for me, this is the key level here. This is the key area, 52,000. Plan B prediction is 135. What's Plan A's prediction? I want to know what Plan A's prediction is because Plan B is not an option. But again, they're predictions. Trade what you see. Trade what you see. So we have this sort of level here at 52,900, so 52K. 52,000 is the level. Now, when it hits this area, do you expect it to drop back down, or do you expect it to continue going? A lot of you guys have been trading for a little while. A lot of you guys have looked at the markets. A lot of you guys have done the likes of this. Do you expect at this particular point, do you expect the market to drop, or do you expect it to continue going up? Now, we're not talking about what you want to happen. What do you expect to happen? Do you expect it to go down, or do you expect it to go up and hopefully then retest? So some people are saying the upside, some people are retest, some people are saying sideways. Some people said it depends on the media, depends on what publicity it's getting. Now, just imagine that there's no publicity. Just imagine that the market is quiet, because yes, we are all governed by what's going on in the market, what's demand, supply and demand is on it. So obviously that's the big mover here. But just assume that it's not. Just assume that the market is it's a natural market continuing to go. What would we expect to happen here? Now, from trading terms, there's a higher probability of a double top than there is a break and retest. There's a bigger probability of a double top for trading terms. Now, for people who are looking to hold long term, they're hoping for this to continue going. But if we're looking at traders and traders alone, for a double top, there's a higher probability of a double top happening than there is for the break and retest. So if it hits here and then comes back down, don't be too worried, because generally what happens in the markets when trading, now I understand that crypto is a different type of animal, okay? It tests a second time and then breaks through on the third time. So an example here is there 1, 2, and look, it broke through on the third time. Just to give you a heads up, to understand that if this happens, it happens quite regularly. You get 2 tests, comes back down, and then takes off. And it may come back down into this level. Now, that level would be similar to this one here. So it may come the whole way back down to that level and then break through. Okay. It's the next bull run that generally tends to be the one that has the momentum. People have saw it here going up. They weren't convinced. Come back down. Then we have all the people who were waiting for the bull run. It's now the next one. So we have all the new traders sort of jumping in there. Where we've all these traders that were looking at the market going down. They're still scared. You may get one or two jumping in. They're still scared, and they're waiting for it to drop again. And when it comes back down this level, that's when they start all loading up. Now, it may not play out that way, but that's general rule of thumb from watching trading over the years, from seeing what happens. That's generally what happens across the market. It double tops, comes back down, and then it's the third run that generally breaks through it. So just be aware of that. It may or may not happen, but it is something that happens quite regularly. And new traders then jump out of positions when it starts coming back down. Okay, there could be some stop loss hunting afoot. So there's where the low would be. There's where the low would be. And yes, this may come back down, stop people out, and then take off. It may, absolutely. But there's probably less likelihood of that happening, because the market here seems to be pretty. So look, we've had a bounce there. Seems to be following the standard. There doesn't seem to be a whole lot of manipulation in this of these levels. So it seems to be you just have to have your level in the right place. So there doesn't seem to be huge manipulation on it. So I would sort of disagree with that a little bit, but there obviously is the chance of that once you have a decent enough level. And that seems to be there, a decent enough level. It's 1, 2, 3 touches on it. So if it goes down below and then takes off, then yeah, you'll have a little bit of manipulation of people and then takes off. So let's have a look at ADA, which has been similar. So ADA has sort of been in this sort of consolidation zone at the moment. We are getting close to that ceiling there again at the 2.4. And it'll be interesting to see what happens when it hits that 2.4 level. Now, just say, because this is slightly different to the likes of Bitcoin. So just say this pops up and hits that level there. What would we expect to happen here? How do I do the arrows? The arrows here are on Zoom, so it's holding the screen, so it's not. So some said down, some say breakout. Do you expect it to come back down, or do you expect it to continue going? Down or breakout? Okay, so we're about 60-40 to the downside. 60-40 to the downside. I'm holding, LOL. Well, look, I'm holding as well. Of course I'm holding. I'm 10% down. I'm still livid over this entry here. But anywho. So this one is not as reactive to sort of levels to the upside as, to say, Bitcoin. Because the market cap of this one is much, much smaller, it means that once a bull run starts, it generally just runs. So if we have a little bit of good news on Bitcoin, we expect this just to smash through this level, absolutely smash through this level. I do not expect it to stop at this level. Now, if all's well in the world and there's no news announcements and the other cryptos are just plodding along nicely, Elon Musk hasn't come out and tweeted or something, would expect it to hit its head and then come back down. But if the market is bullish and people are looking for this long, this will smash through this level and just continue going. That would be the next area where we get some sort of a test. And as we've seen with crypto, these ceilings get smashed out of it all the time, and I was supposed to be level, and there's no remorse for when it smashes through them. So when it smashes through those ceilings, then the next one's there. Look, next one's up there. Then it smashes through it there, and then it goes through the second time again. So, and this is the thing with the likes of this. Once it takes off, it takes off. So this one, you have to sort of buy it. You sort of have to buy it when it's coming down, because once these take off, you have no chance of getting in. You're literally trying to, remember I said to you, catch a falling knife? Well, you're trying to jump into an elevator as it's going up. If the elevator's not stopping, you're trying to jump in an elevator. So the idea is when they're in the phase two, we're buying them up with the underlying asset in key areas, and that's what we're looking to buy. How many people bought it? How many people bought it here at this level? How many people bought it there at that level? 1.855. It now looks like a really good position to buy in, doesn't it? If it comes back down to there, you're going to put your order a little bit above there, and it come back down to this area. Let's have a look at Ethereum. Something similar. Again, we had a really nice break and retest here. Looking for that for a level. See you later, Audra. Okay, come back, touch that level, absolutely gorgeous, and then took off. Really nice level there. Now again, this is all down to the upward trend. This is now down to the little bit of momentum that we have to the upside. And if this continues, then we would expect that to be broken out. But again, this here is the next area. But again, this is very similar to the likes of Cardano, that once this takes off, it takes off. Now, if we look, this generally trends much nicer than the likes of Cardano. Look, we had this really nice trend, and it went on for sort of a year. And now we're actually seen to be trending much better than Cardano. So Cardano has had this consolidation and then took off, and then seems to have a little bit of consolidation, whereas this seems to be just gently just going up, and just people are just happy to continue buying it. Okay, so this one seems to be doing well. It seems to be nicely trending upwards. So the idea is when we have these phase twos, take your small positions on them. Is Shiba here? So did someone say Elon Musk has been at it again? Was that yesterday when he was tweeting, when the whole world was down? He was tweeting on the only platform that was actually working. Wouldn't we like Elon to do something like that? So this has had a pretty decent jump. Now, do we jump in here and try jump on that bandwagon, which means that would be 150%, or do we wait for a phase two that comes back down there? What would be your opinion on the likes of this, according to the rules? Well, Ricky, the thing with this is that this is a sideways market, so it's not something that we would be looking to trade in the first place if we were looking to trade this. Now, again, we'd be buying this and holding on to it. This would be something that you're buying and holding on to. It wouldn't be something that you are looking to scalp in and out. Okay, so the thing with this is that if you're risking 1% of your account, the likes of this is an underlying asset. If you're risking 1% of your account, you could jump in right there and get it for 1% of the account. Now, if it pulls back here, you buy it again. If it pulls back here, you buy it again. Now, there's no guarantee that it will ever hit up here again, but the way the market is running, and when the market Bitcoin takes off again, we would expect the altcoin to take off shortly afterwards. So remember, this is the time where you start loading up on the likes of these. Now, if you have been someone who is lucky enough to keep getting it at this level down here, brilliant. You just sit and hold and you laugh at everyone else trying to get in on it. If you're someone, is this the first time looking at it? Elon Musk is tweeting, it seems to be running at the minute. If you're someone who is trying to jump in on this elevator, look, there is room to the upside on this. And this gets it as high as 150% return. Okay, so there's nice return on that to the upside if you jump in there now. If it pulls back, then this is the ideal scenario to get in here. But you only get in with 1% of your account. You don't load up. You don't get your life savings, put it in there. It's not that type of asset to trade. We've had the move already. And this is where fear of missing out gets in. This is where people are looking at, oh, Henry, should I, shouldn't I? Well, with the likes of this, there is loads of upside on it. But ideally, we'd wanted to pull back. And unfortunately, we're not in an ideal market. We're not in an ideal situation. We have to trade what we have to trade. If you expect this to continue running, if it pulls back here, then you take off. Someone said this is running nicely. We had that double bottom. It didn't really respect this level. So we had that double bottom that took off. We had this descending triangle, and then it broke out to the upside. Did anyone buy it before it broke out of the descending triangle here? Bounce, bounce, bounce on the floor as a breakout of this triangle. Somewhere around August, mid-August. Yes, but I sold it. Well done. Well done. Okay, good shout. And that's the idea, the patterns we have. Again, there was another descending triangle there. Again, did anyone buy it here on this level or a breakout of that descending triangle? Remember, all trading is pattern recognition. Because once you see these patterns, trade them. Whether you're seeing a double bottom, whether you're seeing the descending triangle, you know that the overall market is up. When it comes back down to this floor, because this floor was the easy one to spot. Now this one up here, or even up here, we couldn't have spotted that. We only ever expected it to go to at least this high. But if you bought it at 0.6, 3 6s are 18. So up here, you almost have a 300 to 1. And that's the idea. So do we think this market is undervalued? Potentially, potentially not. It depends on which cryptocurrency, depends on which one is going on. Now, cryptocurrency at the minute, these altcoins are very similar to penny stocks. should we be holding on to these altcoins long term? For some, it is worth a risk. If staking, then yes. Nope. Yes. It depends. It depends on you as a person. Do you believe in that particular coin long term? So it depends on what your outcome long term is on these. But the idea is with the likes of these altcoins, you hold on to them while they're hot, and then you get rid of them when they're not. Now you have the few main ones that are potentially going to stay. You have the likes of Bitcoin, the likes of ADA, Ethereum, XRP. I mean, the likes, you have the 5 or 6 ones that look like they are staying long term. And then you have all these other ones, the likes of Shiba, the likes of Dogecoin, the likes of all of those coming on, and then they have a massive bull run, and then they disappear out of the world again. So what we have to do is we have to make sure that we're not sitting holding the can. If you're profitable on the likes of these, don't be afraid to move your stop losses up. If you're up 100, 200%. Okay, just make sure you understand what your long-term goal is in these. I see a post about Shiba. If you put in 1,000 in Shiba at the beginning of 2020, at its high, you'd have 33 million pounds right now. Well, if my aunt had balls, she'd also be my uncle. If you had £1,000 in Shiba and I went up to 100,000, I'm pretty sure most people would jump out of it. If you had £1,000 and I went up to 500,000, you would have jumped out of it. If it went up to 1 million, you would have jumped out of it. If you had held on to 17 million, or sorry, was it 33 million? You'd be, look, to me, you'd absolutely be mental, or you're already rich and you're now just sitting and holding long time to see where it goes. Okay, so, but again, that's a good problem to have, isn't it? That's a good problem to have. Whether you par close the position, whether you don't, it's a good problem to have. Well, look, everyone, it's been an absolute pleasure. Anyone who has not done my free course, okay, anyone who hasn't done my free course, go to henry-ward.co.uk, and I have a free course online there. There it is, start the free course. They just jump in on that, and that is the free course. Anyone who wants to jump in on the trading group that we have, let me know. You are more than welcome to jump into that. I am doing deals. Either speak to myself or speak to James, and we can get you in on something like that. But again, I will be doing another trading day. So we done a free trading day on Friday, which was really good. I will be doing a trading day again, hopefully the end of this month or mid next month, and I will be letting you know. So anyone who's interested in the likes of those, let me know, give me a shout, and I can put you onto the list. But look, everyone, it's been an absolute pleasure. Thank you very much. Hope you have a lovely day. And everyone on YouTube, click on subscribe and click on follow for more updates on my channel. Thank you very much, everyone. Bye-bye.